Hello and welcome to this Spring Budget 2023 Pension Update special webinar. My name is Lisa Webster, Senior Technical Consultant here at AJ Bell. I think it's fair to say the budget threw up some big changes to pensions and on a level that none of us were expecting. So the idea of this webinar is to take you through the changes and what they mean for your clients. So this is what I'm going to look at today. So we'll be looking at what exactly has changed. First of all, we'll look at the annual allowances. Then I'm going to turn to the lifetime allowance. Obviously, that was the big shock news that we had. And then I'll finish off by looking at the implications for clients that hold protection. And all the bits and pieces around there, which I think is probably the one we've had the most questions on, really, is like the impacts for people with protection, under the new regime. Okay, so I'm going to start with the relatively simple stuff. We'll just have a look through the annual allowances and what's changing. So from 6th of April 2023, new tax year, we have new annual allowances in place. So the annual allowance, the main one for most people, is going up from, has been 40,000 for the last few years. That'll now be £60,000. So basically, people are going to be able to put more into their pensions without having to worry about suffering an annual allowance charge. Can still use carry forward with the annual allowance. Nothing's really changed on carry forward, but I thought it's probably worth just a quick reminder on how that works. And because of some of the stuff I'm going to come on to later, you may have more clients using carry forward in the future. So you can carry forward unused allowance. It's not unused tax relief for those of you that were in the industry long enough to remember pre-A-Day and the old rules. That's all gone. It is the allowance that anything that's left over that you can carry forward. It's for 3 years, so tax year that you're in, and then you go back 3 years prior to that. You have to have been a member of a UK registered pension scheme in the year in which you are wanting to carry forward from. And by a member, you can either be an active member or you can be a deferred member or a pensioner member, as long as you are a member of a pension scheme of some sort, UK registered pension scheme, then you can use carry forward. And you always use the current tax year's allowance first, and then you go back to the oldest unused allowance. So you'd use this tax year, then you go back 3 years, and then 2 years, and then last year, use them in that order. A quick little example on this. And just a reminder, really, obviously, the annual allowance is changing now up to the 60,000, but it is the annual allowance in the tax year that you're carrying forward from that you have to look at and apply when you're using carry forward. So the last few years, we've had £40,000 annual allowance. We can see on here the contributions that have been made, and then we calculate the unused allowance in that tax year. So if we look at 1920, then the annual allowance is 40,000, 20,000 contributions made. You have 20,000 of unused allowance. 2021, you have 15,000. 21, 22, all your allowance was used up. And then we look at 22, 23, and we can see the contribution here was £50,000. So this is over the annual allowance in that tax year because it was 40,000. However, this individual wouldn't have had a tax charge because they've got unused allowance from previous years, which they can use carry forward. They can carry forward to use in the 22-23 tax year. So the question is, for this individual, what could they pay in the new tax year, in the 23-24 tax year? Well, first of all, you use your current year's allowance. So we know that's £60,000 now. So how much carry forward have you got available? Now, I said at the start, you go back 3 tax years. So if we went back 3 tax years, we go back to 2020, 21, and you've got £15,000 there. If you just looked at the last 3 tax years, though, you might think that you've used some of that up already in the 22-23 tax year. But in fact, if we look back further, we can see it's actually the 1920 unused allowance has been used in 22-23. So you do have the full 15,000 available in the new tax year, in the 23-24 tax year. So you can make contributions up to £75,000 before exceeding the annual allowance. So really the message we're using carry forward, if you do have in any of the 3 previous tax years where somebody's made contributions above the annual allowance in that tax year, then you need to go back 3 years from that point to see which year's allowance has been used up, if that makes sense. Obviously in this example as well, in the last tax year 22-23, they could have put more in, but they have effectively lost that 10,000 extra unused allowance they had from 2019-20, but that's gone now because it's more than 3 years old, so there's nothing you can do about that. Another thing to remember with contributions when deciding how much people can put in is a combination of factors. It's not just the annual allowance, it's also earnings when you're talking about personal contributions. So yes, this individual has got enough carry forward, they can make £75,000 of contributions in the 23-24 tax year. But if they're talking about personal contributions, they could only do that if they have £75,000 of UK relevant earnings. So you have to have the earnings to support the level of your personal contribution. Bit different for employer contributions. They can be above the level of earnings as long as they meet the wholly and exclusively rules. But I say nothing, the point is nothing on this has changed. There's no new rules around carry forward. It's just we have a higher allowance now of £60,000, but when you're carrying forward, you always have to think of what the allowance was in that tax year. Next one we're going to look at is tapered annual allowance. So the tapered annual allowance has also gone up from 6th of April. And so now, even those that are fully tapered, they will have an annual allowance, a tapered annual allowance of £10,000. So previously, before the budget announcement and previous tax years, it was down at 4,000. That has now gone back up to £10,000, which is what it was when it was originally introduced. But also the adjusted income threshold has gone up. So the adjusted income threshold is the point when the tapering starts. So you taper, instead of starting at 240,000, tapering will now begin at £260,000. So if we have a look at tapered annual allowance since its introduction, so it was introduced in 2016-17, and for the first 3 years we had an adjusted income threshold of 150,000, or limit I should say, because then we have threshold income, slightly confusingly, of 110,000. Now just a reminder of the difference between those two. Broadly speaking, adjusted income is all income from all sources. So it's earned income, but it's also investment income. So, dividend, interest payments, that is all included in your adjusted income, not just earned income. It's basically income from all sources plus employer contributions. More or less, broadly speaking, that's what makes up adjusted income. Threshold income, again, it's income from all sources, so your investment income and your earned income, but you don't add on those employer contributions, and you do deduct personal contributions. So you can reduce your threshold income by making personal pension contributions. And it has to be both of those that are exceeded in order for the taper to apply. And I say, it's just the limits that have changed on this. Those rules are still exactly the same. So now it means if you have adjusted income above the 260,000 and threshold income above 200,000, then tapering will start. And so the threshold income limit hasn't changed. So the difference between the threshold and adjusted income, those limits, has always been the amount of the annual allowance. So previously there was a £40,000 gap. Now we have a £60,000 annual allowance, is a £60,000 gap. So moving forwards, anybody whose income is above both those thresholds, the tapering will start above £260,000, and for every pound, so the annual allowance is reduced by £1 for every £2 of income they have above that adjusted income limit, subject to the minimum reduced annual allowance. So it means that somebody who earns £360,000 or more, who has income, I should say, of £360,000 or more, they will be subject to the maximum taper. So their tapered annual allowance will go from being 60,000, there will be 50,000 worth of taper if they're £100,000 over the limit, and so it'll be tapered down to £10,000. So this is going to mean that you will have got your high earners, those on high income, are going to be able to pay in more as well, both because the tapering doesn't kick in till later, but then you really, your real top earners, even on the full taper, even if they're still on the full taper, they're going to be able to put 10,000 in rather than they could have put 4,000 in before. Important to note, with tapered annual allowance, you can still use carry forward for tapered annual allowance, that's fine, but you just have to calculate what the tapered annual allowance was in each of the previous 3 tax years, or if you've gone over, maybe earlier periods. Each of the relevant years, you have to work out what the tapered annual allowance was in that year, look at their contributions, and work out the difference of what's available for carry forward. But the principle is still the same on that. Last one on annual allowance is the money purchase annual allowance. So this is going again back to its original limits. It was £10,000 when introduced, but then it got knocked down to 4,000. It's back up to £10,000 now. So money purchase annual allowance triggered when you take flexible benefits. So this is taking any income under flexi access drawdown, or taking any uncrystallised funds, pension lump sums, UFPLS payments, will trigger the money purchase annual allowance. Once it's triggered, that's it, there's no going back. You can't use carry forward for anybody that's triggered the money purchase annual allowance in relation to money purchase defined contribution schemes anyway. Slight difference if they've got DB schemes. So this limit is going from 4,000 to 10,000, so that might impact people's decision on whether to access benefits or not. They may, or to take income, I should say, taxable income from their pension fund. They may be more inclined to do that, if it doesn't restrict them as much as it used to. You can still pay in 10,000 rather than the old 4,000 limits. What it also means is if you have got clients that have already triggered the money purchase annual allowance in the past, who were limited to 4,000, they can now increase their contributions to £10,000 a year without having to worry about an annual allowance charge. Okay, so we shall move on then to lifetime allowance. So obviously this was the big changes. This was the big headlines, from the budget announcements. We expected, there was lots of rumours going down the days before the budget that the lifetime allowance was going to go up. Some figures were quoting 1.5 million, some were 1.8. Obviously, we now know it is scrapped entirely, which I think probably took everybody by surprise. I don't think anybody had actually seen that one coming. So yes, lifetime allowance is going to be abolished. However, it is a 2-stage process. So for the 23-24 tax year, the lifetime allowance still exists. It is still in place. It is still there. It's still at the same level. It's been frozen for a few years now of £1,073,100. The maximum PCLS is the 268,275. That stays the same for the 23-24 tax year. We still have benefit crystallisation events when somebody accesses their benefits for the first time, when somebody dies under 75 without taking benefits. We still have the age 75 test. All of that stays the same. We, as pension scheme administrators, will still have to issue statements to your clients telling them how much of the lifetime allowance has been used. However, the big news is, the bit they're going to be interested in, is the fact there will be no lifetime allowance charge where the lifetime allowance is exceeded. Basically, I think these changes have come in very quickly. Obviously, we were surprised by it. There's probably a few people in government and HMRC that might have been surprised, or probably didn't have a lot of notice beforehand either. There's a lot of changes that need to be made to remove the lifetime allowance. So this is kind of an interim year. From the time of the announcement, there wasn't time to put all the changes through to remove the lifetime allowance entirely. So we still have basically the same processes. The legislation we have had, the draft legislation that came out in the finance bill on the 23rd of March, does make changes, and it has confirmed that the lifetime allowance charge is being removed on this. But everything else is still in there about the lifetime allowance and about the reporting requirements. So we will still have to ask your clients about how much lifetime allowance they have used on previous benefit crystallization events. We will still need to ask about protections. We will still need to get, valuations of things, age 75 tests, things like that, which in a lot of ways may seem a little pointless if there's going to be a charge at the end of it, but the requirements are all still there. So scheme administrators are going to still need this information, and we are still going to have to go through these processes. Which, believe me, if we could settle the age 75 test, if we didn't have to do that, would save us a lot of work and a lot of hassle for everybody. But it's still there for another year for this 23-24 tax year at least. So that's really just, sort of a point to be aware of. If you want to do that, people, schemes will still need this information for our obligations to HMRC. So lifetime allowance charge, though. So it has been removed. It has been removed in the draft legislation, say, for this year. But it's kind of a slightly two-stage process. So anywhere that we would have had the 25% lifetime allowance charge, so where funds were designated to draw down is the obvious one on that, where we would normally deduct the 25% charge, or on, say, age 75 test with unused funds or drawdown funds in excess of the lifetime allowance. That 25% charge, the process is the same, but we get to the bit we will not be deducting that from the pension. So that is good news. In circumstances where you would have the 55% tax charge, this has also been abolished, but in the finance bill, it has now been replaced with income tax at the recipient's marginal rate. So if it's the member who's receiving the benefits, so if it's a serious ill health lump sum, or somebody's just taken the lump sum in excess of the lifetime allowance, which still does exist for this tax year, then instead of having a 55% tax charge on it, we will have to do PAYE on that. Go through the usual PAYE process for that to be paid out to them. When it comes to death benefits, lump sum death benefits, now previously the lifetime allowance charge, it isn't the scheme that's been liable for that. It has been, we pay out the benefits, those lump sums in full, being uncrystallised fund lump sum for, obviously for us as a SIP provider. DB schemes might do a lump sum death benefit, defined benefit, lump sum death benefit, but whichever of those it is, then it would, the beneficiary who received that lump sum death benefit would be responsible for paying the lifetime allowance charge, and the reporting is done through the personal representatives outside the pension scheme. That is changing. So in order to pay out those death benefits, the scheme administrator will have to operate PAYE for that beneficiary. Obviously, they're beneficiaries, they're not a member of the pension scheme. So that is a changing process, and that is something that is quite different. You probably don't get lots of them, but just one to be aware of if you do have clients who receive lump sum death benefits of those types. So obviously, where they would be in excess of the lifetime allowance. Okay, so that's what's happening 23-24. Looking ahead to 24-25 and what happens with the lifetime allowance. This is the year that, as announced in the budget and all the headlines, when the pension lifetime allowance does actually go in the bin and gets scrapped completely. However, as I say, in order to do that, it's quite a big job to get rid of the lifetime allowance. There are literally hundreds of references to the lifetime allowance in Finance Act 2004. So which contained all the ADA legislation and changes since. So there's a lot of work to remove it from legislation. It's in, there's so many implications, in terms of not just taking benefits, but protection issues, PCLS calculations, UFPLS as well, with something which hasn't been mentioned anywhere in any of the documents we've seen so far, guidance, HMRC. In the legislation, there's been no mention of it, but presumably there will be something that has to go in to limit, either to limit UFPLS payments so you don't get a bigger tax-free element than you would than the PCLS that you're allowed, or they get scrapped entirely. We'll have to wait and see on that. We do know, because it was in the budget statement, that the maximum PCLS is going to be frozen as 268,275 going forward. Part of me thinks if you're going to freeze it and not link it to the LTA anymore, because there is no LTA, you could have made it a nice rounder number, but anyway, they've just frozen it at the current level. So there's implications of that when there isn't a tie-up with it being 25% of a lifetime allowance if you don't have a lifetime allowance. So basically, there's a lot of changes that are going to happen to the lifetime allowance. I don't think it's all been decided how that's going to be structured, how exactly that's going to work yet. HMRC have issued a special newsletter regarding the lifetime allowance, and in that newsletter, basically they said, that they're creating a working group, and they're asking, if people want to join that working group, which, representatives from AJ Bell have said, yes, we want to be involved in that, so we can see the changes and see what happens, but also that tells you that there's a working group to do it, that it hasn't all been decided yet. So, we have been getting questions about what happens going forward, about, your links with your PCLS, or if you've got a client that maybe has got some DB benefits and it's then got, got a SIP as well, and the DB scheme actually, the PCLS might be less than 25% of the fund, but whether if they take less than that, but they have like a balance, can you then take more from your SIP, in this new world going forward when we're not tied up to the lifetime allowance? Questions like that, we simply don't know the answers to yet. I don't think anybody knows the answers. I don't think it's been decided exactly how it's all going to work. So I would expect that we will see draft legislation on this. It'll be probably towards the end of the year, end of the calendar year, I would have thought, before we kind of have a bit more idea of what's going to happen with that. Obviously, as we get that information, we will keep you updated. We'll put, if you're signed up for our technical updates, and we'll have information on the website. We'll send it out as we know more. But I think there are a lot of unanswered questions really in that respect for lifetime allowance, PCLS payments, exactly how that's going to work going forward. Okay. Right, let's move on to a little bit more of what we do know and look at the situation around protection. Say another area we get lots of questions on already. So there were changes in this year's finance bill regarding what happens to people with enhanced protection and a bit about fixed protection. So if you have clients with enhanced protection who have a protected PCLS on their certificate, as long as that was in place on the 15th of March, which is the date of the budget, which presumably will be, because enhanced protection obviously was from a long time ago, then from the new tax year, they can contribute without losing their right to protected PCLS. So that's good news, and that's why I was talking about carry forward orders as well. You may have clients now that haven't been able to contribute for years, been a member of a pension scheme. If they want to make contributions, they will have carry forward available. They'll have the last 3 years carry forward plus this year's. They could put £180,000 in if they had the earnings. If you're talking about personal contributions, if they wanted to, they could put that into a pension now. They don't have to worry about breaking enhanced protection. They won't have to worry about the lifetime allowance. They could put that in. However, the PCLS is capped at the maximum available on the 5th of April 2023. So yes, they can put in contributions, get tax relief. Yes, they don't have to worry about lifetime allowance charge, but they won't be getting extra PCLS by putting contributions in. Which you can understand why, because if you're going to let people contribute, to suddenly benefit from protected PCLS as well. But for those clients, I think the only real losers I can see about these whole changes are your clients with enhanced protection, with protected PCLS, who don't want to make any contributions because their PCLS is now going to be capped on as at the maximum value of 5th of April 2023. I say that's regardless of whether you put contributions in or not. So those who were never going to contribute anyway, assuming they have growth on their fund between 5th of April and when they access the PCLS, they're not going to get any more PCLS on that growth. So I've got an example for you of how this works. So let's say you've got a client who has lump sum protection of 30% of their fund. Their fund was valued on the 5th of April 2023 at 1.8 million. So 30% of 1.8 million gives them a maximum PCLS entitlement of £540,000. When they come to access their PCLS, the maximum will be the lower of 30% of whatever they're crystallising and £540,000. So you would hope obviously their fund would grow, and therefore then it would be the 540,000 would be the cap. If their fund value went down, then you would work off the 30%, if that was going to be the lower value on that. And the entitlement, say, is the same of whether they contribute from 6th of April or not. It doesn't make any difference on that. One thing I will just quickly note on this one, for your clients so who have enhanced protection with a protected PCLS, who aren't fully crystallised, providers will need to calculate this 5th of April 2023 valuation, so we know in the future what PCLS they are entitled to. Now, depending on what investments you've got within the fund, within the pension, you know, that could be quite straightforward. Obviously, if it's all right on funds and share service, getting that valuation is easy. You know, some ones you've got feeds from. If you have off-plan investments, if you have anything different, the obvious one will be property. If people have property in their pension, scheme administrators are going to need to get valuations of that property as at the 5th of April 2023 for these purposes. So yeah, you can expect to, you know, if you have got clients in that situation, for administrators to be asking for that information, trying to get that information to get those 5th of April 23 valuations in place. Another one which is in the current finance bill is about standalone lump sums. So if you have got clients, you know, this is all pre-A-Day stuff, if they've got standalone lump sum, only the maximum amount payable, again, 5th of April 2023, would have to do calculation on that. That's the maximum they can have as a standalone lump sum. Anything after that, yeah, anything else in the fund above that level would have to be taken in a different way. It wouldn't be classed as that standalone lump sum. Moving on to fixed protection. So this is for any of the fixed protections. So the original version back in 2012, 14 or 16. As long as your client held that protection at the time of the budget, so had their application in before 15th of March 2023, then they can contribute now from 6th of April 2023 without impacting their PCLS. So they can start making contributions without worrying about busting their fixed protection. And the PCLS calculation will remain the same as it is now. There's no change in terms of how their PCLS is calculated. The only difference for them is the fact they can now start making contributions again. So I'll have a look at the different, what I mean by the PCLS calculation remains the same on that. And it also impacts somebody with enhanced protection if they didn't have lump sum protection. So these are all in the same situation. As long as the protection was in place, as in at least applied for before the budget. So for enhanced protection, the PCLS is tied to a 1.5 million LTA. It's the underpinned LTA that's used. So for these clients, PCLS will be the lower of 25% of the amount crystallised and 25% of the 1.5 million, so 375. Contributions after the 6th of April can be included. So what I mean by that is if you have somebody whose fund value was 1.4 million on the 5th of April 2023, they make contributions, they can be included when they come to take benefits when you do your 25% or 375,000. So they can be used to get you up to that level of 375,000. And it's a similar situation with all the fixed protections, just a different amount applies. So fixed protection 2012 was based on 1.8 million, so PCLS can be up to 450,000. 2014 again was 1.5 million, and then the most recent form, the fixed protection 16, based on the 1.25 million, so it's £312,500, is the maximum PCLS. But the fact you're contributing doesn't make any difference, and it's not calculated. So the valuation date of 5th of April 2023 only applies to your standalone lump sums and your enhanced protection with lump sum protection. It doesn't apply to these. This will be, it's basically the same level as it is now, which is your lower amounts on that. In terms of other protections, so primary protection and the individual protections, there's no mention of them in any of the legislation that's come out in the finance bill this year, because there doesn't need to be, because nothing has changed, because you could still contribute with those anyway, you wouldn't lose your protection, and the lifetime allowance is still in place, and it's still going to be 25% of whatever your protected amount is for individual protections, because you'll have an individual protected amount, you'll still get PCLS of up to 25% of that. Primary protection is based on 1.5 million. on that. So nothing's changed on that. Last thing I'm going to talk about before finishing is late applications. So fixed protection 2016 is still open. There's never been a closing date on that, and the budget hasn't changed it. So there is an opportunity for clients who are eligible still to apply for FP16. So to be eligible, they can't have made any contributions or had any relevant benefit accrual in a DB scheme on or since the 6th of April 2016. If that is the case, they can still make an application, and they would end up with a protected PCLS of the higher amount, so £312,500, so higher than a frozen amount, so they can get extra PCLS if they do this. However, the difference is anybody that held FP16 on the date of the budget can make contributions, whereas somebody who makes a later application, who does it post-budget, they can have the protected PCLS, but they can't make any contributions. So there is a difference there for people that have already held it and people that apply for it now. So you would think that most people now who haven't made any contributions for the last 7 years, if they were going to apply, would already have applied. But you know, maybe not. You might come across a new client or something in that situation. Because the situation hasn't changed, you still can't make any contributions going forward. So the budget hasn't really changed anything. It's the situation same as it was before on that. In terms of other protections and late applications, so fixed protection 16 is still open because it's never closed. All other kinds of protection, enhanced or the other fixed protections, are closed. However, there are limited circumstances where late applications can be made. Very limited, I will stress that point. For enhanced protection, there is a reasonable excuse, which is written into legislation. So if there's a reasonable excuse for not giving the notification to HMRC by the deadline, which was back in 2009, then you can make an application as long as you give the notification to HMRC without unreasonable delay after the reasonable excuse ceased to apply. So this is normally, you know, I think maybe somewhere where maybe the client just had a previous advisor who told them they'd done it, and then they hadn't. Then they discover they haven't got it where they thought they had got it, but it's not the individual's fault because they have information and evidence to show that they thought they had it, or, you know, things like that. So very limited circumstances. With the fixed protections, late applications, there's no reasonable excuse in the rules. However, HMRC can exercise discretion to allow it, potentially. Fairly rare, I would say. But anyway, even if you did apply for those protections, you can still benefit, if you were successful, the higher PCLS as applicable, depending on the type of protection, but you would be in a situation that making any contributions would break it because you didn't have it in place on the 15th of March 2023 when these announcements were made. Okay, so that's all I wanted to cover really. Just the sort of key points from this is that all the annual allowance is going up from 6th of April 2023. So, you know, whether you tapered, access benefits, just the standard annual allowance, most people will be able to put more in, obviously subject for personal contributions, having sufficient earnings to do so. For the 23-24 tax year, it is just the lifetime allowance charge that is dropped. The lifetime allowance still exists. We still have BCEs. All the information requirements are still there. The actual process you're going to go through, the information needed is going to be the same. It's just the charge that's not applying. LTA is going to go completely from 24-25. We don't have all the details. We will try and keep you updated as soon as we have more information in relation to that. Enhanced protection with lump sum is going to be capped at the 5th of April 2023 maximum. So we're going to need valuations in relation to those clients, and it's going to be capped to that amount whether they make contributions or not. Anybody with enhanced or fixed protections who had them at the date of the budget can now start paying in without losing their higher PCLS entitlement, and anybody else for the 23-24 tax year, the calculations for PCLS won't change to anything that we've had previously. So there's no change on that. One last thing I haven't got on the slides, but I will just mention because I know we get asked about it sometimes, comments. Obviously, the immediate reaction after the budget, Labour came out and said that they're going to reverse these changes. You know, and sort of, obviously it makes it, I think it's a difficult position as an advisor in terms of, you know, what's, you know, things are changing all the time, how you advise your clients. I think our house view on this one really is, you know, very much you can only advise on the rules that are there and what we know is occurring. So we know what the rules are for 23-24. In relation to 24-25, we know that it's going to be removed. We just don't know quite all the intricacies yet. Labour have come out and said they're going to reverse it, apart from for doctors. I think that would be very, very difficult for them to do. I think it's a massive piece of work to remove the lifetime allowance. It'll be a big piece of work to put it back in. I think it was, you know, they might have backed themselves into a corner a little bit on it, I think, but it's a big job. It'll be a big job for them to do it. They've also talked about carve out for doctors, you know, how other people would react to that. It wouldn't be as simple to put it straight back in again, certainly not back in as it was. You think anytime they've brought anything new in like this, they've introduced the lifetime allowance, you know, back in 2006, you know, they made changes to the lifetime allowance. Whenever that's happened, they've had protections put in place. So, you know, if they did do it, they did get into power and they did put it back in, you'd think they'd have to have some kind of protection. We'd get rid of them all and then we'd all come back in again with a new version or something. But it is a difficult one, but I, you know, you can only advise on the rules as they are, and not what somebody may or may not do in the future. That is all from me. Thank you very much for your time, for joining me on this. I hope it has been useful. I say we don't have all the answers yet. We will try and help wherever we can, and we will try and keep you updated as and when we get more information. Thank you.